What's happening, guys? Welcome back to the second video. Let's get right to it. The second video is basically about the forex basics. I want to take you through the basics of forex and so that you can understand what this is and what you can expect and how I actually understand the market. This is a market that has been there for as long as money has existed, which means that there is no chance for this market to basically fade away. So as long as we have got currency and as long as we have got money and exchanges during between different countries, different states, different currencies, this market will forever be there. So this is what I want you guys to understand. This is a $6.3 trillion market per day, and this means that there is a possibility that you can make as much money as you need to be kind of like well off in your life. So you've got a chance to make $6.3 trillion in the markets per day, but you don't really need that much. So you're gonna come in and make whatever amount you're making and just live off of it. So I need to make this very clear, right? I need to make this very clear that forex trading is a skill that can be acquired with time. Please make sure that you note down everything I say. I will be speaking for most of this video, but I will try and explain some things on the charts if there is a need. But you need to note everything that I'm saying and make sure that you watch every single video, including this one, so you understand everything that I'm going to say. So this is a skill that can be acquired with time if you really put in the work and the chance to actually understand this. So it's been around since the 1970s, and also there's a misconception that we move the markets. And I want to say to you that we do not move the markets. The banks move the markets. And this is not an easy thing. So because it's not easy, you need to practice every single time. So make sure that you put in some hours into your charts every single day. This is a skill that can be easily mastered and acquired if you are a one player. So this is a one player game. Groups do not work. I have been part of a lot of groups, and I did realize that it can only mess up your head and also like clutter your understanding of the markets. So you really need to put in time and a chance to actually understand the markets in your own perspective and in your own understanding and mind. Again, I need to also state that we have got a language in forex that is a lot different than the language that we're used to. For example, we have got the word bear, which means sell. We have got the word bull, which means buy. So whenever we talk about a bearish market, we talk about a selling market. Whenever we talk about a bullish market, we talk about a buying market. So these are important for me to actually lay out because these words I will be using quite a lot as we move forward. And again, this is important that I talk about this because it makes up the biggest element of your psychology. I will try and record psychology videos as well. This is Monday today again, so I will be recording the videos from today till Friday. Hopefully the course will be done so that you guys can see real-time markets and how the markets are actually playing out. Hopefully we analyze and setups actually go our way. If not, then we will be able to come back and kind of like understand why the markets didn't play out, and we take trades on this course so that you guys can actually see what it is that we're doing. Again, you have to mark these out that make the biggest element and aspect of your psychology. Understand that you will be winning a lot, and understand that you will also be facing and experiencing losing days. So how you eliminate losses being more than your wins is you always want to withdraw. So whenever you make wins, make sure that you take out that money, enjoy it, and spend it on something nice so that whenever you experience losing days, you actually have something to point out to say that you have experienced the market's money. So it's important that you withdraw every single time. And again, it's important that you define and identify your goals. What I mean by that is also understand why are you trading. Some people are trading to make a living from trading. Some people are trading so that they can have a luxurious life. Some people are trading so that they can actually like kind of like move away from their daily routines and actually get to like distress from whatever it is that they're facing in the world, and they distress from the chart. So it's important that you define and you identify the reason why you are trading, which brings us to the next point, that you have goals every single time. You must make sure that you have goals every single time you trade, because then if you smash goals, then you know that you are actually winning and moving forward. So again, I need to explain this, that in the markets there's two types of pairs. There's major pairs and minor pairs, and there's also exotic pairs. So the exotic pairs obviously fall under minor pairs. So major pairs have less intraday moves, minor pairs have more intraday moves, which brings us to the next point, which will be the average daily range, which we usually call it ADR. So for example, I'm going to give you the pairs that I know for a fact. Euro USD moves about 60 to 100 pips per day, which then gives us an average daily range of about 60 to 100 pips per day. For someone that could be a small move, but for someone that could be like a proper move. So you really need to define the kind of a trader you want to be, and also like stick to a focused list of pairs that you're going to be focusing on, because then that helps you understand them, and that helps you get to know how much they move per day. So for example, I'm not going to trade Euro USD. I only trade it when I don't see setups on my major pairs that I trade, on my minor pairs that I trade, sorry, and my other stock that I trade as well. If I do not see any setups, then I can come play around Euro USD to basically get like those small amount of pips before I move on with the week. So it's important that you understand your pairs that you're trading. So for me, 60 to 100 pips is small on an intraday. I would prefer getting 110 pips to 150 pips per day. That is just me. But for someone else, this might be very beautiful and very convenient for them to trade a small and lesser moving pair. So another point that I want to bring out is that on the forex markets we have got different sessions. So I'm going to start with the one that starts when our day starts at 12 p.m. We have got the Asian session that ends at 8 in the morning. So from 12 p.m. to 8 a.m. we have got the Asian session. So this is the third largest economy, the third largest session that we have in the markets, which means that the most yen pairs that we know are traded around about that session. The movement is quite thin. There's not a lot of volatility, which then makes it a session that has high spread. So imagine a session that is ranging, and in most cases that means that the spread would be even wider. So during this session we've got like a less movement, we've got thin movement, and we've got a high spread ratio as compared to the other session. So the second session that we have is the UK session, the London session. So the London session starts at 8 in the morning till 2 p.m. So 8 in the morning till 2 p.m. we have got the London session. So the London session is ideally the biggest session that we have in the whole world. This has high liquidity and it has got extremely low spreads. This is where we trade the most, and it has it has a trendy market. So whenever the pairs are going up, they will be trading up nicely. Whenever they're trading down, they will be trading down nicely, simply because there is high liquidity on these sessions. So this can actually start playing out nicely on Tuesday, because Mondays are generally ranging days and the market gives you a lot of fake moves on Monday. So I prefer to actually start trading on Tuesdays. The second session that we have is the New York session. It starts at 1:30 p.m. till around 6 p.m. So this is when we've got the New York session. So this is when the New York Stock Exchange market is actually working. This is when the NYSE is functional. So this is the second biggest market in the universe, and this has taken 85% of USD pairs moving, and this is the most popular session in the whole world, and it has a high chance of reversal. So suppose you had like a trending market, like a proper bullish market on the New York session, on the London session, excuse me, there is a high chance, not all the time though, but there's a high chance that when the New York session comes, you will start seeing pullbacks or reversals before we actually head on to the Asian session. So this is what I want you guys to understand, on the markets, that you will be having these elements. Make sure that you don't fast forward this video. You literally follow everything that I am trying to show you. And the other element that I'm going to bring into the table is the element of fundamentals. So you do know that we've got technical traders, we've got fundamental traders, but I'm a technical trader. Everyone at Regenesis is basically mostly technical. We do have fundamental analysts, but we are mostly technical traders. So where we go to actually check our fundamentals for the day, or for the week rather, is on the Forex Factory calendar. So on, you get to Forex Factory and you go to calendar, and then you go to filter. So you filter out all the medium and the low impact news, apply filter, leaving out the high impact news. So you can see that on the Monday, this is today, we've got bank holidays on the New York, the US, which means all the USD pairs will be moving slow, and even on the GDP, we've got bank holidays as well. So today is actually not a good day to trade. So this is a ranging day. So it would be advisable that people stay away from the charts today and basically just monitor how the markets are moving. And then you can see that from Sunday till Saturday, we only have a few fundamentals that you have on Thursday. On Tuesday, basically, we have BOC events coming up. This is Paula speaking. For the CAT, we've got NZD as well. This is RBNZ financial stability reports as well. This is high volatility. These will move the markets in a specific way. So you would rather stay out of the markets when you see that there's actually high volatility news that are coming up, especially if you're a technical trader. But if you believe that your technicals will play out with the fundamentals, then you can actually come in and actually trade the news as well as the fundamentals. You can see we've got Powell speaking on Friday as well. This will be an interesting thing to watch, especially now that we're recording this course as well. So this will be an interesting element to basically watch. So this is where we come for all the fundamentals. And from here, we'll just be diving onto the charts and speaking about technicals. I hope you guys actually understood everything, and I will see you guys on the next video.